What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TSLA for Tesla Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the stock regularly here on the channel. The main thing to point out is that we have a backtest of the breakdown point here, roughly 900 on today's session, leaving us with an inverted hammer and a rejection at that area, right? On the 30-minute time frame, this is abundantly clear. You can see we have the consolidation range. We have a break and retest, failure, and a close back down outside of that on the daily time frame. The next thing we're going to look for is a breakdown of the two-day lows here, roughly 853, we'll call it, for a rotation into $800 to the downside. Now, why 800? Well, it's simply coming from prior support right here, but most importantly, why was that support in the first place? It was the prior breakout point, which led to this massive run in the past, right? So 800 is the firm downside target if the energy from this box essentially is going to fully be released to the downside. 800 is where we should find the next major area of contention. So we are leaning a little bit more bearish than bullish based on the inverted hammer, the upper wick there, and the rejection on the back test of 900. But I would at least point out that if this is going to turn around and be bullish, it's got to produce a double bottom pattern, and the neckline break, essentially recapturing 900, is where you start to become more bullish on this pattern now that it's starting to show its hand. So don't jump the gun here. It's definitely not looking bullish, but if you see this pattern start to develop, maybe there's something to be had up and over 900 to get us into 943, which is just simply the top end of the daily range. And from there, we would definitely want to reassess the chart and see how we've arrived at that destination, right? Because it's important how the chart moves, not just where you are in the chart, okay? So that's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.